done little to improve availability as prices soar and consumers groan under rising energy costs. The retailers said cooking gas supply remained severely constrained, warning that scarcity and high prices may persist if the government fails to address the situation. The development comes amid growing complaints from consumers across the country over the rising cost of cooking gas, with neighborhood retailers in some locations selling the product for as much as 2,400 naira per kilogram. In an interview with The Punch, the chairman of the Liquefied Petroleum Gas Retailers Association of Nigeria, Ayobami Olarinoye, said that while supply improved slightly following the arrival of an LPG cargo in late May, marketers and retailers were still struggling to access products. According to him, the current situation has made it extremely difficult for retailers to obtain gas from plant operators, thereby worsening supply challenges in the downstream market. Though the supply was a little bit better because of a shipment of LPG in late May, owned by a company, the price remains high, Olarinoye said. He added that another LPG vessel arrived in the country on June 3rd, but alleged that the product was being reserved for the owner's retail outlets. Describing the situation facing retailers, Olarinoye said access to products had become increasingly difficult in recent weeks. Now, Nigeria has recorded a sharp improvement in its merchandise trade balance in the first quarter of 2026, as exports rose and imports declined significantly, pushing the country's trade surplus to 7.55 trillion naira. According to the National Bureau of Statistics Foreign Trade in Goods Statistics report released on Monday, total trade stood at 34.79 trillion naira in the review period, with exports accounting for 21.17 trillion naira and imports amounting to 13.62 trillion naira. The report showed that the trade balance remained positive at 7.55 trillion naira, representing a 340.88% increase compared to the preceding quarter. The Statistics Office disclosed that total exports rose by 2.77% year-on-year from 20.60 trillion naira recorded in the corresponding period of 2025 and in the quarter of 2025. Exports accounted for 60.85% of total trade during the quarter. Crude oil remained Nigeria's dominant export commodity, generating 11.20 trillion naira and accounting for 52.92% of total exports. Non-crude oil exports stood at 9.97 trillion naira, while non-oil exports contributed 3.19 trillion naira, representing 15.05% of total exports. The report noted that crude oil exports, despite declining by 13.53% from 12.96 trillion naira, recorded a year earlier increased by 15.45% compared to the previous quarter. Other petroleum product exports surged by 51.49% year-on-year to 6.78 trillion naira. India emerged as Nigeria's largest export destination during the quarter, with goods valued at 2.77 trillion naira, representing 13.09% of total exports. It was followed by France with 1.97 trillion naira, the Netherlands with 1.95 trillion naira, Spain with 1.63 trillion naira, and the United States with 1.18 trillion naira. Together, the five countries accounted for 44.84% of Nigeria's total exports. Now, in agriculture, the agricultural sector comprising crop production, livestock forestry, and fishing recorded a 3.15% year-on-year growth in the real gross domestic product to 11.87 trillion naira in the first quarter of 2026 to first quarter of 2026 from 11.51 trillion naira in the first quarter of 2025. The National Bureau of Statistics, NBS, disclosed this in its GDP report for the first quarter of 2026. The report showed crop production remained the dominant driver of the agri sector, contributing 8.9 trillion naira in the first quarter of 2026, representing an increase of 3.39% year-on-year from 8.6 trillion naira in the first quarter of 2025. Further analysis showed that the livestock subsector grew to 1.57 trillion naira in the first quarter of 2026, representing a 2.20% increase from 1.54 trillion naira in the first quarter of 2025, while forestry posted a 4.14% growth to 589.88 billion naira in the first quarter of 2026. Meanwhile, the fishing subsector recorded growth of 1.72% year-on-year to 792.92 billion naira in the first quarter of 2026 from 779.49 billion naira in 2025. The MBS, in its GDP first quarter 2026 report, said 4 sub-activities make up the agricultural sector, including crop production, livestock, forestry, and fishing. The sector grew by 9.93% year-on-year in nominal terms in the first quarter of 2026, showing a decrease of 0.11% points from the same quarter of 2025. Looking at the preceding quarter's growth rate of 6.82%, there was an increase of 3.11% points. Crop production remained the major driver of the sector. This is evident as it accounts for 66.76% of the overall nominal value of the sector in the first quarter of 2026. Quarter-on-quarter growth stood at minus 36.37% in the first quarter of 2026. Agriculture contributed 18.11% to nominal GDP in the first quarter of 2026. This figure was lower than the rate recorded in the first quarter of 2025 and lower than the fourth quarter of 2025, which recorded 19.40% and 25% respectively. Now, Nigeria's spending on the importation of premium motor spirits, popularly known as petrol, plunged by over 96% in the first quarter of 2026, marking a dramatic shift into the country's fuel supply landscape and signaling the growing impact of local refining capacity. Latest foreign trade statistics released by the National Bureau of Statistics on Monday showed that only 87.401 billion naira was spent on the importation of motor spirit ordinary, the official trade classification for petrol, between January and March 2026. The figure represents a sharp decline of $2.18 million compared to the 2.27 trillion naira spent on petrol imports during the corresponding period of 2025. The development is particularly significant as petrol, which had consistently ranked among Nigeria's most imported commodities for years, was completely absent from the list of the country's top traded products in the first quarter of 2026. An analysis of the MBS data by our correspondent showed that petrol did not feature among the top 19 traded products with the rest of the world, Africa or West Africa during the review period. Instead, the leading traded products included crude petroleum products, crude petroleum oils, and oils obtained from bituminous minerals, gas oil, durum wheat, machines for reception, conversion and transmission of data, youth vehicles, motorcycles, agricultural seeders, medicaments, aircraft parts, butanes, petroleum bitumen, sugarcane, herbicides, and fuel additives. The most imported commodities during the quarter were petroleum oils and oils obtained from bituminous minerals, gas oil, durum wheat, machines for the reception, conversion, and transmission of voice, images, or data, and used vehicles with diesel or semi-diesel engines. And that's a wrap on business news. Do remember to stay tuned for News Track at 2 p.m. as well as Global News at 6:30 p.m. Thanks for watching.